So there are a lot of moving pieces here, and I think we'll have a lot more answers over the course of the week. But what we do know right now is how PIMCO is positioned relative to Russia. So they have kind of this dual-edged sword right now as it pertains to Russia, in the sense that they have a $1.5 billion wager tied to the actual government bonds of Russia. But then they also have written contracts relative to the CDS of Russia, meaning they would be the ones to pay out their counterparties if Russia were to default, to the tune of about $1 billion, perhaps a little more than $1 billion on that front. Now, the key question here is we don't know what next week brings. That is when a debt payment is due. The first one amid this whole conflict and sanctions and so forth is due on March 16th. Putin has said that he would permit corporates to pay in rubles, but of course the value of the ruble is rapidly depreciating. We don't know if they're going to actually be able to, given the sanctions that are in place right now, pay out. And the question is, does that trigger those CDS? Does that account to a default? And then the question that everyone's asking is kind of taking a look a few steps forward. What does that mean for a restructuring process? Because we've never actually seen a restructuring process take place on a sanctioned government like we're experiencing right now. So a lot of historic, unprecedented situations at play.
So a couple of things. Obviously, $2.5 billion of a potential, underscoring the word potential, loss is not an insignificant amount of money, but when it's put towards $2 trillion plus in assets, it sort of puts into perspective exactly what we're talking about. Do we know how PIMCO is already viewing these assets, and whether it is marking the bonds to zero now or not? How should we think about this in terms of the way that they're specifically doing it?
No, it's a great question. So they obviously mark to market their funds on a daily basis to account for the various moves in these markets. And with the Russian bonds trading around 20 cents on the dollar, they have been marking their funds accordingly. So it's unclear exactly how much their losses will be at the end of all of this. Given the markings, that's something that we don't know exactly. That's not in the public domain. That's not something that my sources were able to tell me. But we do know that the funds themselves have seen outflows. They've showed some negative performance in light of all of this. But to your point, $2 trillion fund, this is a very minuscule fractional amount of the overall assets that they oversee that we could be talking about, even in the worst case scenario in terms of losses related to Russia. That said, it certainly begs the question whether they would continue to invest in Russia after a default. I have a hard time believing that would be the case, given just the structure of their fund. I don't believe it's set up to really invest, at least heavily, in distressed or defaulted assets.
It certainly does make you think about, more broadly, are there other PIMCOs, so to speak, out there? And that, frankly, at this point remains to be seen. Les, I appreciate it so much. I know you'll be following that money, and you'll let us know whatever you find. That's Leslie Picker.